Okay, so have you ever looked at the stock market and thought, is this really anything more than gambling? You see those headlines, someone makes a fortune overnight, someone else loses it all. It's easy to think it's just all luck.
It is tempting to think that, yeah, I get it. But it's way more complicated than just luck. Like, what if I told you that the most successful people in the stock market, they share a certain mindset, a way of thinking that really sets them apart?
And that's exactly what we're diving into today. No get-rich-quick schemes here. We're going deep with Stock Market Wizards, a book that takes us inside the minds of some incredibly successful traders.
It's not about give you a stock tip, right? It's about understanding how these wizards think, what's going on in their heads when they make decisions. You can build up your own toolkit as we go through this.
All right, I like it. Let's get the tools. So first up, the story of Mark Cook. This one is wild. Who would have thought that someone's summer job leading Elsie the cow around, like the Borden mascot, would lead them to mastering the S&P 500? Elsie the cow, who knew?
It's crazy, but it really shows how success can come from all sorts of places.
Yeah.
His path, and a lot of the others we'll talk about, they highlight that sometimes it's about just being curious and wanting to learn new things, even if you don't know how they'll be useful yet. It can really give you an edge.
So not just about an MBA then, more about spotting an opportunity that other people might miss. But he didn't just magically become a Wall Street whiz overnight. Cook had some bumps in the road. Early on, lost it all on the options market.
And that's a big lesson. Lots of these traders made mistakes, sometimes big ones. What makes them different is they learned from it, came back stronger.
Which brings us to probably the most important tool. Confidence. Not being cocky or anything, but that deep belief that you know what you are doing. After all, if you don't believe in yourself, why should anyone else?
That's it. That's the key. Think about Steve Watson. Jumped headfirst into managing money with absolutely no track record picking stocks. His background was in credit analysis. Totally different world.
So what made him think he could do it?
Unshakable confidence in his ability to learn and figure it out. He said once I decide I'm going to do something, I become determined to succeed, regardless of the obstacles. And it's not just blind faith. He put in the work, honed his skills, and learned to trust the process, especially in the beginning.
Which is always easier said than done, right? When you're staring at your computer screen trying to predict the market's next move, it takes serious dedication. Like Mark Minervini, legendary for his work ethic, 14-hour trading days, 6 days a week, barely takes a break, even when he's super successful.
It's a good point. It's not that we're promoting workaholism, but to be really great at anything, you need to be completely focused, constantly learning and getting better.
So it's like you have to become a student of the market, trying to know more than the average person, and that takes serious commitment.
Exactly. Recognizing that success takes a different level of commitment, going above and beyond. It's about turning something that seems complicated into something you understand, one trade, one lesson at a time.
And that leads us to another tool for that toolkit we're building, a big one, emotional detachment. Steve Cohen's story about shorting Nintendo really surprised me. We're not talking about some random small company. This is Nintendo right at the peak of Pokemon.
Right. And get this, his kids were obsessed with Pokemon.
Yeah.
Imagine shorting a stock that your kids are basically using for allowance.
Talk about putting your money where your mouth is. But it's a great example of how successful trading isn't about feelings. It's about looking at the facts.
Exactly. Cohen could see that as hot as Pokemon was, Nintendo was still vulnerable. He saw them as a one-product company.
That's some cold-blooded thinking right there. Reminds me of something else we see in a lot of these traders, the willingness to do something different than everyone else. Like Michael Lauer, he actually stays away from those companies everyone is going crazy for.
Lauer, he's interesting. He figures those popular stocks are probably already overpriced. Everyone's already piled in. His thing is finding the companies that everyone else is missing, the ones that are undervalued by the market.
Which takes guts, right? To go against what everyone else is doing. Don't get caught up in the hype. I think there's a saying about that.
There is something about being fearful when everyone else is greedy, and vice versa.
Exactly. That's the one. But speaking of going your own way, John Bender, the options trader, he's a great example of independent thinking. He built his entire system on questioning those standard models everyone else was using.
Yeah, Bender's a perfect example of someone who wasn't afraid to say, hey, I don't think that's quite right. He spotted the problems in those old models, how they didn't match up to the real world. And so he made his own way, trusted his gut, developed a real edge.
It makes you realize how often we just blindly follow advice, right? Whether it's some hot stock tip or just how we're told things work, these wizards make you realize you got to do your own research. Think for yourself.
You said it. It all comes back to being self-reliant and never stop learning. Being curious, not just about the market itself, but your own decisions. Why do you do what you do?
Okay, so we've got confidence, work ethic, not getting emotional, thinking for yourself. That's a lot already. But we have to talk about the other side of confidence, managing risk. This is where things get serious because it's not just about being right. You also have to survive being wrong.
100%. This is where Mark Cook's story, the one where he almost lost it all early on, that one's so important. He didn't lose everything because of bad picks. It was leverage. Too much of it.
Easy to forget that leverage cuts both ways, right? Makes your wins bigger, but also your losses.
It's a tool that you have to respect. The big lesson from Cook is it's not enough to just be right. You have to be able to stay in the game even when you're wrong.
Which gets at another idea we see a lot with these traders, diversification. Not putting all your eggs in one basket, no matter how good you think that basket is.
Right. You wouldn't bet everything you have on one hand of poker, even if you had a really good hand. It's all about managing your risk, protecting yourself from those events that could wipe you out.
So even if you have that pig at the trough attitude, always looking for the best opportunity, like Steve Watson talks about, you still need to diversify.
Absolutely. Finding that sweet spot, taking smart risks, but also protecting your capital. Remember, Watson never has more than 2–3% of his portfolio in any one stock, even his favorites, and his short positions, even smaller.
So even the traders who seem super confident, they still understand that you can't go all in on one thing. They're playing the long game, going for consistent returns, not just trying to get rich quick.
Exactly. Understanding that the market, it's like a marathon, not a sprint. You can't win a marathon if you burn yourself out in the first mile. You know what I mean? You have to be smart about how you use your energy.
I like that. It's like having a good defense in sports. You're not going to score every time, but a good defense keeps you in the game, ready when the opportunity comes. So besides diversification, what other risk management stuff did you find?
One thing that stood out, particularly for traders like Mark Minervini who really focus on timing the market, is stop-loss orders.
For those of us who haven't quite mastered reading those stock charts yet, explain what a stop-loss order is and why it's so important.
Sure. A stop-loss order basically tells your broker to automatically sell a stock when it hits a certain price. Think of it as a safety net. You get to decide ahead of time, if this stock drops to this price, I'm out. That way you limit your losses.
So even if you think a stock is going to go up, you still set a point where you'll sell if you are wrong.
It seems counterintuitive, but even the best traders in the world get it wrong sometimes. A stop-loss order takes the emotion out of it. It's part of your plan.
It's admitting that you don't know everything and planning for when you're wrong.
Exactly. Now, stop-loss orders, they don't work for everyone. Michael Lauer, for example, he avoids them completely. His approach involves buying stocks that have already gone down a lot. A stop-loss would just kick him out too early, right when the stock is about to bounce back.
Makes sense. Shows how important it is to find the tools that work for your specific style.
Exactly. That's a key takeaway from all of this. There's no one right way to do things.
Which is exciting and terrifying at the same time. It means we can make our own strategy, find what really clicks for us.
Exactly, and that's what makes investing so interesting.
So many different styles, right? I mean, we've got traders glued to their charts, others poring over financial statements, some making trades every day, others taking the long view.
It's amazing how the market attracts such different people, and they all find a way to make it work. It's actually really encouraging, Success isn't about fitting some mold, it's about figuring out how to play to your own strengths.
Which brings us back to that toolkit we've been filling up, right? Confidence, insane work ethic, emotional control, thinking for yourself, managing your risk. But the one that really stands out to me, the one that kind of ties it all together, is this commitment to always learning.
For sure. These wizards, they're learning machines. It's not just reading books or going to seminars. They really dissect their own trades, the wins, the losses, trying to find those hidden patterns.
Mark Minervini, the guy who works like crazy, he's a good example, right? Tracks every single thing, analyzes every trade. If something isn't working anymore, he's not afraid to throw it out and start over.
Exactly. And it goes beyond just the numbers. You're trying to understand their own minds. What are their biases? How do they react to stress? That kind of self-awareness can make all the difference.
So it's like they're treating the market as this giant puzzle and not just trying to solve it once, but to understand how it works so they can adapt.
That's a great way to put it. And that leads into something else that often gets overlooked. With all the excitement about making trades, people forget about patience. It's so tempting to jump on every opportunity, but the best traders are often the ones who know when to wait.
Like Ahmet Okumus, he started out on the Istanbul Stock Exchange, and he's all about waiting for the right moment. He'll wait for a stock to hit his price, no matter how long it takes, even if he misses out on some quick gains.
He's got it figured out. Long-term success isn't about making every single trade. It's about being patient, waiting for those high-probability setups, the ones that really fit your strategy.
So patience isn't just about sitting on your hands, it's about discipline, having the guts to stick to your plan when everything is telling you to do something else. Sometimes the best move is no move at all, right?
You got it. And,
Yeah.
and that takes us to one final piece of the puzzle here, I think, perspective. The market can be overwhelming, right? So much information, so many different opinions. It's easy to get lost in the day-to-day noise.
It's true. But those really great traders, the wizards, they can see the bigger picture. They understand that a lot of what moves the market is out of their control, and they don't panic when things get bumpy.
Exactly. They have that long-term vision. And they've learned to ride the waves because, like life, markets move in cycles.
So the real magic isn't about seeing the future. It's about building up those mental tools to help you deal with whatever the market throws at you.
And I said it better myself. It's about understanding the market, but also understanding yourself, right? Your strengths, your weaknesses, what works for you.
And on that note, we'll leave you with this. If you could sit down with one of these traders just for dinner, who would it be? And what one question would you ask them? Food for thought. Until next time, happy investing.